If your parents have retirement accounts, investment portfolios, or work with a financial advisor, understanding the fees and expenses they pay can be an important part of the planning conversation. In this video, let's break down the costs that can be associated with investing so that you can be armed to talk with your parents about the value they are getting from their financial advisor.
So today I'm here with Matt Mondu. Matt is a certified financial planner, a chartered financial analyst, and a chartered market technician. Matt, thank you so much for joining me today.
You're welcome.
Today we're going to be talking about figuring out all-in costs of investments. So for anyone listening, if you're a do-it-yourself investor or you work with an advisor, how you're able to find what types of fees you may be paying in these accounts. So if you could just give a broad overview of what someone might want to look for or expect.
Yeah, it's interesting, right? Because fees can get buried, sometimes intentionally, sometimes unintentionally. Most consumers of financial advice or wealth management understand what the advisory fee is. That's the percent fee that they pay their advisor. Generally, on an annual basis, it can range from 1 to 2% annually. Most investors are very aware of that fee. Where things start to get a little more complicated or murky are expense ratios, underlying fees inside of investments. That's where actually costs can start to add up, unbeknownst to the end investor. And then also, there's kind of like there's commission-based products. There's some annuity contracts, life insurance. Those types of products will have commissions and fees associated with them as well.
And sometimes that can be sold as investment products when they might not be, but exactly to your point, they're going to have those underlying fees.
Yeah, exactly. So in those cases, an agent might receive a commission, and then on top of that, there's various fees embedded within a product, not only for the investments, but for the cost of insurance.
Sure. So taking a half step back, you mentioned expense ratios. Could you just define what that means?
Yeah, I think generally the simplest way to think about it is an advisor is using a product to outsource an investment strategy. That could be on U.S. stocks. And they have designated a certain mutual fund that they want to use to manage the U.S. stock exposure within their client's portfolio. That portfolio oftentimes is, just to generalize, is managed by somebody in New York City. That firm in New York City that's managing that mutual fund is collecting a fee in terms of an expense ratio to a client to manage that sleeve of investments within the client's portfolio.
So oftentimes you're seeing that a client will have that expense ratio in the fund that they own and additionally pay an advisor as an overall management fee for their portfolio.
Exactly. And there's another style of fees that's very prevalent as well, and they're associated with products called separately managed accounts. So oftentimes an advisor will use a separately managed account. Think of it very similarly to a mutual fund. However, the client feels like they have individual stocks. They get traded each month and they're feeling like they have a custom portfolio of these individual stocks. When they open their statement, they see the names, they see the activity. Whereas with a mutual fund, it's all in a wrapper in a product that's kind of a black box or unknown. What's happening, what's held in the mutual fund isn't listed on their statement. Mm-hmm. Separately managed accounts also have fees. Oftentimes, the manager of the separately managed account is doing the trading. So the fees can actually be higher with a product like that, and the client may be unaware that they are in that product to begin with.
Sure. So Matt, if you're meeting with a new client, mm-hmm. let's say, and maybe you're talking with them, you have their statements in front of you. What types of things are you looking at, or are you telling them to look at to find this information?
Yeah, great question. So we're looking at, first off, anything generally that's a mutual fund, ends in an X.
Okay.
ETFs, exchange traded funds, those trade during the day like stocks, but they are managed products that have expense ratios associated with them. And then oftentimes, if we can tell, depending on what month statement we get, it's often best if we look at a January, April, a July, or an October statement where the account was billed for the advisory fee and often the separately managed account fee, if that exists,
Okay.
we can utilize that information off the statement to determine what the investor's all-in cost is. The advisory fee will be a line item. We'll need to do a little bit of work on our end, or the investor could do the work as far as gathering information on the products within the portfolio, mutual funds, or separately managed accounts. Separately managed accounts will often show up as a line item on the statement as well.
Okay.
The mutual fund, the ETF fees, the investor, the advisor will have to dig a little bit deeper to uncover what those are.
Into the fund itself.
Correct. Yeah, you'll have to look at the fund prospectus, perhaps. You could go to Yahoo Finance, type in the ticker. There's a bunch of different ways to do it. Go to the fund website. It's accessible. It's relatively easy to find. It's not necessarily obvious, but it's relatively easy to find, through the internet.
Sure. And I think the point that we want to drive home here is it's not that fees are necessarily inherently bad. It's that you want to make sure that the fee that you're paying is appropriate for the amount of value that you're receiving as a client of a financial advisor.
Correct.
So how would you recommend someone look into that and kind of say, I know what my fee is. I know whether it's an expense ratio or an assets under management fee. I know what that is, but how do I quantify that against the value that they receive?
Yeah. So step one is understanding the all-in cost of the investment management. So we want to add up what the advisory fee is and then what the product fees are. So for instance, if we determined that the investment management product fees were 0.5%, the advisory fee was 1.5%, we need to add those two together, and the investor's all-in cost would be 2%.
Okay.
Now, knowing that, the investor can make an educated decision. Are the services that I'm receiving, is the performance that I'm receiving, are all of these, the value that I get back aligned with the price that I'm paying, right? Because at the end of the day, price is what you pay, value is what you get. Mm-hmm. And I think everyone's a little different on their determination of, hey, was the planning good enough? Was I getting tax advice? Was I getting some advice on estate planning? Were they helping me get the most out of my 401k plan, 529s, all these different items that encompass an individual's financial planning world? Are they getting the value back?
All right, Matt, if you could just share, to put a bow on this, maybe a couple key takeaways.
Yeah, I would say investors want to understand what their all-in fees are that they're paying their advisor. Advisory fee plus any investment management fees that we've talked about. Number two is understand the value, right? So we have fees on one side, value on the other. What type of value are they getting from their advisor? Comprehensive financial planning, tax planning, 401k, company plan guidance, all those things and more. And then finally, investors need to be able to understand their investment statements. And like I said, a big part of that is understanding how they're allocated, what the investment management fees within the products that they're being put in are. I would say those three things would be the main takeaways here.
If you'd like a second set of eyes on anything that we talked about today, reach out to us at Blue Chip Partners. And I want to say thank you so much for joining today, Matt.
Yeah, happy to be here.
And thanks for watching Blue Chip Chats. Can't wait to chat again soon.